Friends, we will make a beginning with the new chapter, income from other sources. This is the last head of the income which we need to take up. Friends, so far we traveled with 4 heads of income, and each head of the income there is a beginning section which discusses about the chargeability. Always what is most important is clearly understanding the charging section, because which type of the receipts we would like to bring under this particular head and tax it. See, from the examination point of view, if you look at what is most repeatedly tested is with respect to the dividend taxation and the gift taxation. These are the 2 aspects where we need to get into complete clarity, and then we have section 56 to 59. 56 discusses about the chargeability, and 57 discusses about the permissible deductions against the income. Then 58 what is not deductible, and 59 discusses about the deemed income. Now, to make a beginning here, we have 56.1 and we have 56.2. Generally the feeling is what? This is a residuary head. What is not going to get taxed under the remaining 4 heads will get taxed under this 5th head called as a income from other sources. Yes, that is true. But you should also understand the point that there are certain incomes which are specifically made to be taxable under this particular head of income. That is all being given in section 56(2). So what your section 56 subsection 1 says, for a particular income or for a particular receipt to be taxed under this particular head, what are the conditions to be satisfied? There must be an income, and such income is not exempted by any provisions of the Act, and such income is not chargeable under the other 4 heads: income from salaries, income from business, capital gains, and house property. So if these conditions are met with, such income, such a receipt, in case it has got the characteristic features of the income. What is the characteristic feature of the income? Income is something which comes with some regularity or expected regularity and from a definite source. Now, what are the specific items which are going to be taxed only under this particular head of income? That is all being given in 56(2). And your 56(2) says what? Dividends, of course, other than the dividends referred under section 115(o). What is that section 115(o)? That is dividends declared by the domestic company on which dividend distribution tax company is going to make the payment. Similarly, deemed dividends covered by section 222(a) to (d). Again, section 222(e) is something on which a dividend distribution tax will not be paid. It will be taxed only in the hands of the shareholder. At this point, let me give you a small clarity, like your dividend distribution tax under section 115(o) to be paid by the companies is only with respect to the dividend declared by the domestic company and the deemed dividend covered by section 222A to D. Dividend declared by the foreign company and deemed dividend covered by section 222E, on that company is not paying any dividend distribution tax. Consequently, there is no exemption available to the shareholder. He required to offer it as an income and he need to pay the tax. So that is the reason why here when we say dividends, we are not looking at the exempted dividends. Which dividends got exempted? Dividends on which company is going to make the payment of dividend distribution tax under section 115 of O. And then friends, winnings from lotteries and crossword puzzles, including horse races, card games or other games of any sort, are from gambling, betting of any nature. Then in case if an employer is receiving from the employee any contribution towards the provident fund, and if that SSE don't have the business income, then because when we studied the business income, there also you will be studying this particular point. If you are carrying out the business and if you are collecting from your employees contribution to their provident funds or welfare funds, on its collection it becomes an income, and on its payment before the due date specified under the respective acts, it shall be allowed as a deduction. So if you don't have the business, still you may need to employ the people. Then for them, if there is a PF concept and their contribution you are going to receive, on its receipt it will become income, on its payment you will be allowed a particular deduction. Then interest on securities, unless and otherwise such a dealing in securities is your business. Dealing in securities, if it is your business, the interest income will be taxable under the head profits and gains from business and profession. Then friends, income from the machinery, plant, furniture belonging to the SSE and which are let out on hire. Of course, again it comes with an addition saying that unless letting it is your business. Similarly, all these assets of plant, machinery, furniture, if they are let out along with a building and there is a composite rent and you are not able to bifurcate between what is the rent for building and what is the rent for letting out of the plant and machinery and all, then such a composite rent is getting taxed under the head, what is it? Profits, this income from other sources as a point. Inseparable, if rent is inseparable, then such a composite rent will become taxable under the head income from other sources. Similarly, proceeds of Cayman insurance policy. Of course, unless they are not being taxed under the head salaries or profits and gains from business and profession, because to be taxed under the head salaries, what is most important? Employer and employee relationship. So, in case if they are not taxed under the head salaries or business income, then such Cayman insurance policy proceedings will get taxed under the head income from other sources. Then friends, any sum of the money, in case if the aggregate of which is going to exceed 50,000, then whole of such amount will become taxable as a point. Similarly, if you are receiving any property, then if such property is received for inadequate consideration, to that extent it will be taxed under the head income from other sources. Of course, a detailed discussion we will make on the gift taxation. Similarly, income sometime you may receive in the form of interest for compensation or enhanced compensation which is paid belatedly. See, compulsory acquisition happens, government need to pay the compensation, but it is getting delayed, and because of the delay, interest the SSE is getting. Such a interest income will be taxable under the head income from other sources. Of course, there is a deduction also, 50% of such interest for interest on a delayed payment of the compensation will be allowed as a deduction. So these are specifically made to be taxable only under the head income from other sources. Other than that, generally there is a very big list as to what becomes taxable under the head income from other sources. Few things like subletting. If you are taking a particular premises on rental basis and you are subletting to somebody, that income from subletting will be taxable under the head income from other sources. Casual incomes, insurance commission, family pension. Why family pension becomes taxable under the head income from other sources? Because pension to be taxed under the head salaries, employer and employee relationship should be there. The relationship between the family and the employer is not that of the employer and employee relationship. So that made us to say that family pension is going to be taxable under the head income from other sources. Directors' sitting fees for attending the board meetings, interest on bank deposits, interest on loans, income from undisclosed sources, remuneration received by the members of the parliament, interest on securities of foreign government, examinership fees by a teacher from an institution or from a university, then whatever the interest on the unrecognized provident fund, that is employees' contribution to the unrecognized provident fund, on that if interest comes, that interest portion will be taxable under the head income from other sources. Rent from the vacant piece of land, agricultural income from agricultural land situated outside India, interest received for the delayed refund, income from royalty unless it is taxed under the head profits and gains from business and profession, director's commission for standing as a guarantor to the loan taken by the company, director's commission for underwriting the shares, gratuity received by the director, income from a racing establishment, income from granting the mining rights, like that. There is a very big list. All these are also the things which are going to get taxed under the head income from other sources is a point. Friends, refund of income tax is not an income, because income tax is not allowed as an expenditure. So the question of treating the refund of income tax as income does not arise. But once interest is going to be received for such refund being paid with a delay, naturally that interest becomes a taxable is a point. And then perquisites are provided to the director, because there the relationship is not employer-employee. Then such a perquisites will be taxable under the head income from other sources. So these are broadly the things to be taxed under the head income from other sources. Of course, one after the other we have to take it for a detailed discussion. First, we will start the discussion with dividends. Dividends, when we make a beginning of a dividend, I personally feel at this level only we have to finish off with the dividend distribution tax also. Today, company, domestic company, need to pay, in addition to the income tax which they are paying on their profits, on their taxable income, even when they pay, they distribute such profits, they need to pay the dividend distribution tax. What is the rate at which it is to be paid? 15% plus, what is it, 5% surcharge and 3% educational cess. Put together it comes to what? On 15% 5% and then on 15% this 3%, put together it is coming to 16.225 percentage company need to pay the dividend distribution tax. So once company is going to make the payment of dividend distribution tax, on such dividends it will get exempted in the hands of the, the shareholder. Now in this context, you should be very clear that when a company receives a dividend from subsidiary company and it is going to pay to its shareholders the dividend, then what the law says, whatever the dividend received from the subsidiary company, when a company is said to be a subsidiary company, that is 51% or more than 51% of the shareholding one company is having in the other company, it is called as a subsidiary company. If subsidiary company is going to make the payment of a dividend to the holding company and subsequently holding company wanted to distribute the dividends to its shareholders, the point is on what the holding company need to pay the dividend distribution tax? Net of dividends paid minus dividends received from the subsidiary company. On the balance they require to pay the dividend distribution tax. So this is very important from the examination point of view, kindly make a note of. Dividend distribution tax under section 115(o). Dividend distribution tax under section 115(o). Who need to pay? First, payer domestic company. Payer domestic company. On what they need to pay? On what they need to pay? That is, write down. On any amount, declared, distributed, distributed are paid by such company. Are paid by such company. This dividend, friends, could be paid either out of the current year profit or out of the accumulated profit. It could be either an interim dividend or it could be a final dividend. So rate of tax, 15% plus a surcharge 5% plus educational cess 3%. Put together it will be 16.2225. 225 of what? Of the amount so declared or distributed or paid is a point. Then friends, we have to understand the point that dividends, in case if the holding company is receiving from the subsidiary company, then those dividends must be reduced, because the very purposive intent of the law is they don't want to again and again tax. So write down that particular point. Note, dividends received from subsidiary company, dividends received from subsidiary company to be reduced from dividends distributed by domestic holding company. Dividends distributed by domestic holding company. Of course, as a point you can remember the things like that, but what the section says, like such a dividend must have been received from the subsidiary company, and second thing is that subsidiary company might have paid the tax on such a dividends. Then domestic company, that is a holding company, is not a subsidiary of any other company. That holding company should not be the subsidiary of any other company. These are the preconditions which are fixed for this particular purpose. And when you say dividends, which dividends? Write down, dividends include deemed dividend under section 222A2, under section 222A2 D, A2D. Then friends, here just to make you to feel this point, there is an example. R Limited holds 65% shares in the S Limited, 40% of the shares in the T Limited. Coolly listen the question. R is a holding company. It holds 65% in the S Limited and 40% in the T Limited. That means S Limited is a holding company of is the subsidiary company of the R Limited, but T Limited is not the subsidiary company of the R Limited. What happened? R Limited is receiving 30 lakhs of dividend from S Limited and 9 lakhs of the dividend from the T Limited. And R Limited declares an interim dividend of 75 lakhs to its shareholders, and thereafter a final dividend of 1 crore 20 lakhs to its shareholder. Put together 75 plus 120. Put together is what? 1 lakh 95,000. 1 crore 95 lakhs. Now friends, try to understand when it is going to pay the interim dividend of 75 lakhs. From that 75 lakhs, whatever the dividend it received from the subsidiary company, which is a subsidiary company, S Limited is a subsidiary company. From it, it received about how much? 30 lakhs. From that 75 lakhs, this 30 lakhs is to be reduced. Not that 9 lakhs which it received from the T Limited, because T Limited is not a subsidiary, is a point. So on that 45 lakhs, they need to pay the dividend distribution tax at the rate of 16.225%, which will work out to 7 lakhs 30,031. But please do remember, on the final dividend which it declared and paid, on that 1 crore 20 lakhs, nothing is allowed to be deducted, because already dividends received from the subsidiary company are deducted from the interim dividend. So same amount you can't reduce it twice. Once you already reduced against the interim dividend which you paid. So the question of again taking that amount, deducting the same from the final dividend declared by the company does not arise. So the most important point that you need to understand at this juncture is that in case of a domestic holding company, when it is going to make the payment of the dividends on which it required to pay the dividend distribution tax, in case if such domestic holding company is going to receive the dividend from its subsidiary company, such amount of the dividend must be reduced from the dividend paid by the holding domestic company, but it can be reduced either against the interim dividend or against the final dividend, not twice, is a point which we want to drive. Then friends, you have to understand another important point is no tax on distributed profits by an undertaking or enterprise which is engaged in developing, operating and maintaining a special economic zone. If there is a domestic company which is engaged in developing, operating, maintaining a special economic zone, in case if they are going to declare the dividends, on those dividends, dividend distribution tax is not required to be paid. So also the shareholder is also not required to offer it as a taxable income. Generally principle is what, only when company makes the payment of dividend distribution tax, it gets exempted in the hands of the shareholder, but for the companies which are engaged in developing, maintaining and operating the special economic zone, exemption is given from paying that particular dividend distribution tax. At the same time, the shareholder is also not being troubled. But friends, please remember, this kind of a facility is available prior to 1/6/2011. In case if any domestic company engaged in developing, operating and maintaining of the special economic zone declares or make the payment of the the dividend on or after 1/6/2011, definitely they require to pay the dividend distribution tax. So as a noteworthy point, you just make a note of it. That is, company engaged in developing and operating and maintaining the special economic zone distributes, declares, makes payment on or after 1/6/2011, then it shall be liable to dividend distribution tax. It shall be liable to dividend distribution tax at the rate of 16.225 percentile. Friends, within what time limit this amount of tax is to be paid? Within 14 days it is to be paid. That those 14 days are to be calculated from which date? Declaration or distribution or payment, whichever happens earlier, from that date you have to take the 14 days. Within 14 days, you have to pay the dividend distribution tax. Write down. Time limit for depositing dividend distribution tax, DDT, within 14 days. Within 14 days. So just as a memory point, so I am not making you to write in detail. And please remember, just like income tax, even dividend distribution tax also will not be allowed as a deduction while computing the business profits of the company. So dividend distribution tax is also not allowed to be deducted against the business income. Then if there is any delay in payment of this tax by the companies, then they are liable to pay the interest. At what rate? At 1% for every month or part thereof, from the date when it required to make the payment to the date actually paid. For that particular period, interest is required to be paid. Write down. That is interest payable for non-payment of tax, non-payment of DDT, dividend distribution tax, by the domestic companies. What is it? 1% for every month, 1% for every month, or a part thereof, on the amount of tax, for a period beginning with the last date to the date of the payment. Last date to the date on which tax is actually paid. Please remember, if company is liable to dividend distribution tax and if it don't make the payment, then the company shall be said to be SSC in default. And once company is deemed to be an SSC in default, then what is the consequential effects? Penalty can be levied under section 271C. Of course, penalty proceedings, try to understand, friends, in case if one is able to prove that beyond their control, it has happened that it could not make the payment. If they show a reasonable cause, such a penalty proceedings can be well withdrawn. Then prosecution is also there. That is because in case of the companies, the directors, they need to go and sit in the jail. And this prosecution is for not less than 3 months, which can be extended up to 7 years along with the fine. Of course, friends, please don't get away just because of this provision from becoming directors, because you are all going to become future directors for the different companies. Please remember, in case if you are able to, director is able to prove that there is a reasonable cause for such default or the failure, then he can very well escape this prosecutions also. Then once company makes the payment of dividend distribution tax, in respect of that, shareholder is given an exemption under section 10 clause 34. Write down that point. That is exemption of a dividend in the hands of the shareholder. Exemption of a dividend in the hands of the shareholder. Section 10 clause 34. Section 10 clause 34. When company makes the payment of dividend distribution tax, when company makes the payment of dividend distribution tax, when company makes the payment of dividend distribution tax, such dividends gets exempted. Such dividends gets exempted in the hands of the shareholder. In the hands of the shareholder. Of course, the noteworthy point here is, it's not that you know when the exemption is available. You should know when the exemption is not available is a point. When the exemption is not available, when the dividend distribution tax is not paid. When the dividend distribution tax is not paid, under what circumstances? In case of a foreign company declares the dividend, or dividends covered by section 2 clause 22 E. Write down. Dividends declared by the foreign company, dividends declared by the foreign company, and deemed dividend under section 222E, under section 222E, is not covered under section 115O, is not covered under section 115O. Accordingly, such dividends shall be taxable. Such dividends shall be taxable in the hands of the shareholder. In the hands of the shareholder. Now friends, we will go with the deemed dividend covered by section 222. Right. Of course, how to remember all this, sir? Yes. See, if you understand why a deeming fiction came, probably these deeming sections you will be able to properly understand. See, all this drama generally happens with whom? Generally it happens with the companies in which public are not substantially interested. Usually. So, these provisions gets invoked more in case of companies in which public are not substantially interested. First, try to understand the point that myself and my brother started a company called as Medarsi Dreams, where I am 50% holder and he is 50% holder. We did a good business. We got the profits. On that we made the payment of income tax. But when we want to withdraw that money, profits, there is another tax waiting for us called as a dividend distribution tax. That is, our Medarsi Dreams need to make the payment of dividend distribution tax. Then what we thought of? Why we should declare the dividends and take the dividends? We will distribute the assets among ourselves. Then the law said what? What does it mean? It means you are taking out of the profits only, na? Out of the accumulated profits only, na? So that will amount to the deemed dividend. Then I got a criminal idea. I am going to convert this accumulated profits into bonus shares. Thereafter, I will withdraw the assets from the company. That's the reason why the law says when we say accumulated profits includes profits which got capitalized and converted into bonus shares also. So section 222A says what? Any distribution by the company to the extent of accumulated profits involving the release of the assets of the company shall be deemed to be the dividend. Now, when they said like that, then the next idea what we got is, you are not allowing us to withdraw the assets, distribute the assets or release the assets. Then what I planned is, let us convert the profits into debentures. Profits are also liability, debentures are also liability. Convert profits into debentures and give those debentures to the shareholders. Subsequently, shareholder can make sale of those debentures or can come to the company for their redemption at a subsequent date. That also what the government says, dal mein kala hai. That also, in case if accumulated profits are there, why you are doing all this? Converting them into debentures and giving it to the shareholders, subsequently they coming and encashing it. You are trying to defeat the purposive intent of the law. So that amounts to the deemed dividend. Then, usually to whom you pay the bonus shares? To the equity shareholders. If bonus shares are given to the equity shareholders, we don't doubt your sincerity. But if the bonus shares are given to the preference shareholders, that means what? You are trying to defeat the purposive intent of the law that whenever the profits gets distributed to the shareholders, company is liable to pay the dividend distribution tax. In order to avoid that, you are trying to give bonus shares to the preference shareholders. Even that also will amount to the deemed dividend. This is being covered by section 222B. See, on the asset side, you are not permitting me to play. On the liability side also, you are not permitting me to play. मैं क्या करूं? बहुत सोचे, सोच के क्या करे? लिक्विडेट कर दो कंपनी को. क्या करना? लिक्विडेट करना. दोस्तों, generally liquidate which companies we will do? Companies which are running in losses, we liquidate. Companies are running in profits, if you are going to liquidate, इसका मतलब क्या हुआ? You don't want to pay the dividend distribution tax. If somebody is there from Guntur, in Guntur what is the famous hotel? Shankar Vilas. Shankar Vilas, New Shankar Vilas, Bhavani Shankar Vilas, like that you are going on changing the names and new companies you are floating. Old companies with good profits you are, what is it? Liquidating and distributing the capital assets to the shareholders. There also the law caught this kind of mischief, and they said section 2 clause 22C says, on liquidation of a company, in case if the capital assets are distributed to the shareholders, and at that particular point of time if there are any accumulated profits, then it amounts to the deemed dividend as a point. Then friends, okay, if that is the case, you are not allowing me to play on the asset side, you are not allowing me to play on the liability side, you are not allowing me to liquidate the company. तो मैं क्या सोचे, रिडक्शन ऑफ द शेयर कैपिटल बोल के कुछ देने के लिए सोच रहा. Of course, if it is buyback which is permitted under the Companies Act, then it will not attract the deemed dividend. But without buyback scheme, if you are trying to reduce the share capital, and at that particular point of time, if there are any accumulated profits, then that also will become, what is it, deemed dividend is a point. Now friends, we have 222E. What is that 222E? Is your, this is only applicable to the, what is it, companies in which public are not substantially interested, private limited companies. क्योंकि ये स्टोरी कहां पे होगा? जनरली इट हैपन्स ओनली विथ प्राइवेट लिमिटेड कंपनीज. क्या स्टोरी है दोस्तों? लोन्स दे रहे. किसको लोन्स दे रहे? शेयर होल्डर्स को लोन्स दे रहे. तो गवर्नमेंट का क्या प्रॉब्लम है? हमारा कंपनी, वी आर टेकिंग द लोन, व्हाट इज योर प्रॉब्लम? प्रॉब्लम इज देयर. When there is accumulated profit, पहले डिविडेंड ले लो, बाद में लोन ले लो. See, generally anybody first will want to eat the profit and then want to take the loan and eat. This is a natural phenomena. But you are unnatural, you are doing an unnatural thing. What is that unnatural thing? Looking at the accumulated profits, not touching them, you are trying to take a loan from the company. That means dal mein kala hai. So that is the reason why they said, in case if a private limited company is going to give the loan to its shareholders, when there are accumulated profits, then it amounts to the deemed dividend. Which shareholder? Shareholder holding shares carrying 10% voting power. ये सोच के मैं क्या करे? Instead of my taking the loan from the private limited company where I am a shareholder, I asked that private limited company to give loan to an entity where I have got substantial interest. Even if loans are given to concerns or entities where the shareholder holding 10% of the share capital here is having a substantial interest, even that also amounts to the deemed dividend is what they said. Of course friends, there are much beautiful points here. As a final student, you are supposed to understand those beautiful points. I only tried to put overall from 222A to 222E, why these things are getting into the law book. But you have to study with verbatim and understand what are the exceptions and exclusions from the purview of this deeming fiction. So friends, one after the other, let us try to understand. Friends, try to understand, even if we spend some more time on this particular dividends, it is still worth. Because when I am looking at the previous suggested answers, what is there, only two areas are being very much tested at the final level. One is a dividends, another is a gift taxation. So love to write. Deemed dividends. deemed dividends, section 222A, section 222A. Any distribution by the company, any distribution by the company to the extent of accumulated profits, to the extent of accumulated profits, involving the release of assets of the company, section 2 subsection 22A. Note: capitalization of profits by issue of bonus shares, to the equity shareholders, does not amount to release of assets by the company, hence shall not be deemed to be dividend, dividends.